a very interesting piece today about how investor optimism about China is waning. The article spoke about how investments in Asian emerging stock markets, excluding China, has exceeded the inflow of funds into China for the first time in 6 years. According to data compiled by Goldman Sachs, over the past 1 year, foreign money has been flowing into countries in Asia, excluding China, and the total amount of money that came in was more than $41 billion. Now, during the same time frame, China received a smaller amount of foreign money amounting to about $33 billion. If you look at the previous year, the situation was a bit different. In that year, money was actually flowing out of the Asian markets, excluding China, and the total amount of money leaving these markets was a significant $76.6 billion. In contrast, foreign investors were putting money into the Chinese stock market, and the total amount that came in was about $42.8 billion. Now, what's more interesting is that foreign investors are currently betting on two themes. One is buy AI driven, and the other one is buy India. The AI-driven theme has spurred inflows into Taiwan and South Korean markets, and foreign buying has shifted to India on the back of robust growth and expectations that the country would benefit from supply chains shifting out of China. Now, the World Bank President Ajay Banga had something interesting to say about this. Now, we'll come to that later, but first, let's understand the reasons behind the pessimism about China. For some time now, there were many expectations about China's post-COVID recovery, but a slew of economic data released recently painted a different story. GDP fell short of expectations, export demand is falling, the property sector is experiencing a downturn, and unemployment is high. Now, we will discuss why China's economy is struggling in detail in this week's episode of Third Empire. For now, you should know optimism about China's economic recovery is waning, and this has also impacted investor sentiment, which has resulted in outflows from China and inflows into other markets such as India. Now, speaking of India, India's economy is seeing resilience amidst many headwinds, and hence we are seeing ample investment flows into the country. In recent news, the Asian Development Bank recently maintained its forecast of India's economic growth at 6.4% for fiscal year 23, as it witnessed recovery in consumption demand in rural and urban areas, but also highlighted the global slowdown. Now, likewise, several other agencies have also made estimates and pegged growth for India between 5.9% to 6.5%. The IMF had set the least forecast at 5.9%, while RBI maintained the highest at 6.5%. Now, while these numbers are not exceptional, the growth is coming on the back of many global headwinds that we are facing today. And even with the current forecast, India is expected to be the fastest growing major economy in the world. Now, coming to what the World Bank president had to say about India. Ajay Banga said that India has proven more resilient and emerged from the pandemic relatively stronger than others. And he also mentioned that India has a 3 to 5 year window to capitalize on the China plus one opportunities as companies seek alternative manufacturing sites away from China. And if India can truly capitalize on this opportunity, this could prove to be significant as it would drive economic growth in the country. Having said that, this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com